Welcome back, everybody, to Swing Trading. My name is Mike Fairborn. Hope you're having a good day and a good day in the markets. It's been volatile for the last little bit, has it not? And I wanted to review and really kind of touch base on and make sure we're clear on some of the specifics to entering and potentially exiting our swing trades and just kind of managing today some of our winners, our losers, and some new potential trades that we'd be looking at in the paper money platform. So I'll look forward to going through that with you all today. And let's see, we'll take a look at the markets as well. Would like to say hello to all of you. Hello to you, John. We've got Andrew Riceberg. We've got Jerry, Cheryl, Ray. Hello to Ray and Robert. Got Brown Buffalo. We've got Ocean Life, Cody Williams, and others, folks. Kevin Baker. Folks, any questions, comments you have, throw those into the chat so we can address those for you throughout our discussion. I'm really looking for an interactive discussion today as we really kind of break down and combine a couple of concepts that we've talked about previously as we do look specifically at managing our existing positions and new positions. So I think it's going to be a good time to review that. I'm going to type some stuff out today. Well, some information specifically on, what are the targets that we're looking for? How are those exits? The targets, specifically the exits around the targets, as well as when do we exit for other purposes, stops, and other reasons as well. So we'll go through that with you all. And with that, I'm joined in the chat by a good friend of mine, Cameron May. Good to have Cam here, veteran of the markets, no doubt about it. And so any questions, comments you have, throw those into the chat for us. All right, well, let's turn to our disclosures to get going here. Information here is for general information purposes only. Options carry a high level of risk, are not suitable for all investors. Okay, specific securities used to demonstrate analysis, trading functionality were selected randomly. Spread trading must be done in a margin account. Now, multiple leg option strategies will involve multiple transaction costs. Now, specifically to that, short options, which we do have a few, can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paper money software application is for educational purposes only, and investing does involve risk, including loss of principal. With that, there is no guarantee that that execution of a stop will be at or near the stop price, and past performance is no guarantee of future results. Let's fast forward to just our standard slide here, just to get us all back on the same page as we talk about swing trading. And we'll get that up right now with some drawing tools, and there they are, beautiful. All right, well, let's do this. Once again, great to have you all on board. Thanks for joining us today. Taking a look at, well, you guys know it by now, don't you? What is that? That is an upward trend, but it is specifically a price pattern known as a bull flag. The flag being kind of illustrated by the lines over here. This is one of the key patterns that we'll talk about. Now, not all of the patterns. In fact, last week we talked about an inverted head and shoulders bottom pattern. Well, I said that twice. Inverted head and shoulders pattern or a head and shoulders bottom. They're the same thing, but that is another price pattern that does have targets, that we do look at specific exits when target levels are reached. A target level for a flag pattern that we talked about has a couple of different target points. One that a lot of traders will use is a very, very short-term target that is also known as target number 1, as we refer to it in this class. That is the high of the move, that is the pole of the flag, and that is the first exit point, potential exit point. We have another one, which is way up here to the right-hand side of our screen, as you can see, and that is going to be based upon the length of the initial pole of the run drawn off the bottoms here up to this top. And when that price level is equal, that is also a potential exit level, as we discuss within swing trades. Now, generally, because we are looking at these shorter term moves, the trade itself is short term. It is days to weeks to form, and oftentimes we are going to really 3 to 10 days. We're looking at 10 days being calendar days, so about 2 weeks. So just so you understand, just another background behind our discussion again today as we go into this. But I'd like to just kind of hit this off first, because I know many of you are getting the hang of this. Many of you are new to our discussion, and so I wanted to bring that point up. Now that I've done that, let's go ahead and take a look at the markets real quick. And we'll go through some other areas here. That is a stock that we were looking at previously. I'm going to go ahead and just take this off for now because I didn't want to look at the markets. I'm going to pull this over to the left-hand side, and we'll take a look at SPX right there. Now, here is the S&P 500 index. And as you guys recall, we talked about this trend line coming down. And if you keep drawing that trend line, which was actually an interesting trend line potential break right there, we extended into some new highs, all-time highs actually, before we dip lower. If we continue the extension of that trend, drawing it now underneath the trend line, what you're going to see is that it could act now as possible resistance. Resistance or R question mark right there. We're getting a nice little hammer pattern though as it stands right now. In fact, let's clear this off and zoom in on that because there could be a reversal there. A lot of times too, before I zoom in, let me just show you this. There is the prior support level low right there. We're coming right down to it. If you do hammer off that, that's oftentimes a good test of what could be support at that level. We could see support there. If you get a confirmation candlestick, that could be a positive. We could get a hold, a close above the high, the low day, let's say for tomorrow. Of course, we'd have to wait for that to unfold, but that could take place. But just because we retrace below that low, if we close right back up above it, all else equal, that could be a positive to the markets. And I was wanting to look today actually at, initially earlier in the week, I said, well, maybe there's going to be some bearish trades we could look at in our discussion today. But actually we might, it's already kind of past that sort of area here. And we have had a tendency, if I draw some lines across the top here and across the bottom, there's a nice gap there to kind of illustrate that, close to a prior high over here as well. What do we see there? We see a sideways consolidation pattern, a range. I talked about this last week in my, let's see, the ThinkScript class. It's also referred to as a Darvas box by an individual, Nicholas Darvas, who had coined that term years ago. But it's a sideways kind of a rectangle pattern. Now we are at the bottom of that range and we've had a tendency to bounce. And so the concept today was as well, do we start looking at some of the bearish trades? Or do we wait and maybe look for a possible bounce here, and maybe the S&P 500, which is what we're looking at obviously here, will influence a number of stocks out there that might be a little bit oversold in the short term, and they could start to bounce higher. Believe it or not, there's quite a few bull flags out there right now in the market. I've got a few to illustrate for you that might participate if in fact we bounce off these lows. Now, I know many of you are technicians out there. You're very good at that. I'm just going to highlight one of the moving averages out here that many of you, I think, probably keep an eye on. I know a lot of individuals do. It's talked about probably the most common moving average, which is the 200-day. Let's just make this a little bit thicker here. And this could be another reason why we could see a bounce. So there is a bounce right there off the 200-day, which is it's lining up very nicely with what we're getting here on the support level test and a candlestick pattern with the possibility, if we were to close higher tomorrow above this range, like we had right over here. Can you see the hold right there? The hold again being the close above the high of the low day. That's our acronym right there. And oftentimes that can be the initial start of the bounce. There's your low bar. There's the high of the low bar. We closed above it. It was, we kind of opened higher and closed lower on that bar, but we still closed above the high bar. And a lot of times that is our initial point in terms of the start of a move. Will we get one tomorrow? That's a good point. We'll have to wait and see. We won't get one today because we made a new low off of the 200. So keep that in mind. Wow, we've already got a survey in the chat box, folks. If you have a chance to fill that out, that'd be great. I do look at those. If there's something like from the presentation or a topic request, whatever the case is, yeah, if you're able to click on that, you can fill out the survey. I think if you click on it, during our discussion, you have to click on it during discussion, but you can fill it out after. There's only 2 questions. Unless that's changed, I think it's very, very short. I just want to reference that real quick. And by the way, Cameron did pin it to the top of the chat. Awesome. Okay, thank you for that. If you like today's discussion too, encourage you to smash that like button. It really helps me understand if you guys are finding these topics helpful and useful. I sure love it. It's a lot of fun, and A lot of action with swing trading oftentimes. Where was the last time we dipped below the 200-day moving average? While we're on it, before we're done. It's been a while. And notice when we did dip below, what is that? That's October, November. I guess it's early. Well, no, it's October of 23. 23. We are in 25 now. Got to remind myself. Yeah, it's a new year. So that's, we were above it all through 24, and that was a positive year. And a lot of times, technicians, market technicians, as well as other market participants on the institutional side, they'll look at the 200-day moving average, and as long as we're above it, they call it bullish. If we're below it, they'll call it bearish. But notice over here, we did dip below it, but we got right back up above it. That too is also a possibility after an extended pullback after a big run. So these are some things to keep an eye on here, but we might be in a position bouncing off the 200-day and getting back above that support level. We got to see where we're at towards the end of the day. The day's not even done yet, but there you go. Oh, let's see. Gary says, or Jerry, let's see. Let's pull that up, Jerry. Let's take a look at the NDX. Just saw that in the chat. Who mentions NDX bounced off the 200-day also? And that is correct. And it looks like it did actually come very close to testing it yesterday. Let me zoom back in on that. There's your 1 year. And there you go, Jerry. Yeah, so really close. Yeah, that's a good catch. Appreciate you bringing that up. This too, we can see a bit of a box over here. There's certainly a range over here of similar lows, similar highs, clearly similar highs touched off that range. We're right back to it. So will the 200-day bolster that level? Could be very interesting to keep an eye on. And by the way, remember the time frame. Last thing here before we switch on, the time frame. 3 to 6 days. Not weeks, not months, not hours, but days are what traders will often use on the swing trade time frame for just these kind of moves, right? Like right here, that bounce, that follow through. Really trying to take just the quick, sharp move after the trend has begun to turn possibly back to the upside. Notice how that could actually fit quite well too. NASDAQ, S&P over this time frame. Look at these bounces when they come off the bottom. I'm saying 3 to 10 days clearly looks to fall within that range. Okay. All right. Now I had sent this, by the way, this tweet out. I'm just going to throw this out. I put it out yesterday. Really appreciate everybody who was able to participate during the time frame that I had it open. But we had just a question I threw out here too. Just something I want you guys to keep in mind because I'm seeing some changes within value and growth, and there might be opportunities on the value side, value and income, relative to tech stocks. Although the tech stocks might be bouncing off the bottom too, as we saw. We'll see if that occurs. But I just wanted to highlight this right here. That it was about 2/3. It's not quite to that, but 60% plus versus growth over here. And in terms of what will be the winner, what will be the other in 2025. So there have been a few that have been moving on the value and income side. I could see that. And of course, maybe some sharp bounces we could see with growth as well. So with that, a quick note, this is kind of our visual of growth, perhaps. We could be looking at the NASDAQ 100 as a gauge to growth. There are a lot of growth stocks within the NASDAQ 100. We can see that over here. In fact, at the Market Watch tab, just quickly, I'll reference this. Let's go over to it right there. Go, NASDAQ 100. And there you go. So you can see some of these names. I mean, many. There's a Starbucks. That's not tech. But there are many others. There's also Pepsi. That's not tech. And Costco. Some others. But many, many tech stocks in there. So that's kind of a reference. And what we saw here on the NASDAQ, we did get a new high. Just like we did on the S&P 500. And we did get a new low over this range. Now, we do not have a lower high yet, though. A trend really occurs, a change in trend, when you get both. Now, this could be ideal if we start to see weakness over here into the next week. So next week, we might actually be able to see some bearishness if that does unfold, question mark. But like I said, there's a long-term trend up. We're bouncing off the 200-day. A little bit different with the NDX. It tested that 200 here, but immediately bounced up at around, roughly 10 days over here as well. So will we get that again? That's what we're looking at right now. But that's just kind of a visual of growth. If you throw this symbol in to get a reference of value, you could do something like $SP500 and then just do a V. That's the S&P 500 value index is what that is. And it too bounced off the 200-day. It's a little bit interesting. It's kind of like this bounce up here, sideways, and will it break up higher? That's the question. It looks like a little bit like a bull flag. There's a longer term trend. We'll have to wait and see. And by the way, there's a lot of companies in here that I wouldn't really consider value. And a lot of times, defensive type stocks. Quick note, and then I'm going to move forward because we got a lot to look at here. But just briefly, want to show you this under our 6-month grid charts right there. You'll notice that some of the defensive sectors have actually been doing pretty well, and these could be interesting areas too to look for price patterns. Bull flag being one of those. Inverted head and shoulders patterns, things along these lines right here. Look at the strength of the trend of staples, known as a defensive sector for sure. Also, healthcare. It looks a lot like a possible flag pattern right here in healthcare. And when you see the entire sector showing what we're seeing over here in the sector, well, there could be possible bull flags to be looked at there. That's kind of a visual of healthcare, which had been down previously, but can you all see sort of the flag follow through here? There could be a longer term flag at play. We've got a T1 touch over here on the sector. So it's already reached our T1, our target 1 level. But what about target 2? It looks like we're just breaking above highs right here. Will we continue up to target 2? That is the question. Okay, so that's a look at some sectors as well. Just some areas I wanted to give you guys to be thinking about where we could look, you might look during the week for certain areas. All right, well, diving into some of our just review of some of our additional stocks that we placed, had trades on previously. This was one of them right here. Our target did get hit. And let's talk through some of the specifics now as we break this down for you, okay? So it was an inverted head and shoulders pattern. You can see, and actually you can't really see that well. Oh, okay. For some reason I had that line in there and it's now gone. But the inverted head and shoulders pattern is drawn off the bottom to the top of that range. And we take this same price move, as you can see in the ovals, I have them highlighted here, here, and here. That is your shoulder, head and shoulder, breaking above this level. And our target was reached about, it was a little over 3 points higher. And so that would have been an exit. That's a T2 exit right there. Okay, and that is exactly what the inverted head and shoulders pattern shows. Now, it's a little bit stronger than the bull flag, although some bull flags can be drawn this way. A bull flag, which it also was too in a sense, you had this move up here, it would have kind of had a target range over here, measured by the move drawn off the bottom, right, of this range. So it's looking at this price again and projecting that same price going forward. Both were very, very close. The differences here is one of the targets is drawn off the top of the range and the other one is drawn off the low before the run higher. Okay, but that was our exit there on Verizon. Verizon seemed to work out good. Notice over here, let's talk about this too. I'm going to draw, let's get some things going here. I've got just a little bit of, I've got just a few things started over here for us that I had drawn up here. And I just had typed in just some basic information in here. Basically, all I was looking at here was looking at target exits first. First and foremost, our target exits. We talked about this a little bit, but I really wanted to line it up so we're all on the same page each and every week as we go through this. So the target 1, we're talking about a flag pattern, or it could be another different type of price pattern. This one I do have the pole of the flag. I have that listed in there, but a target 1 would be the prior high of the move. So the prior high of the move would be right here. This would have been a very, very short-term target, but that still is our number 1 target. Number 2 being the extension of whatever price pattern we are drawing in here. And that is, in fact, right there. Obviously, that's going to be the head and shoulders top. Okay, so with that, let's go back over here and look at target 2. That's going to be the extension of the flag or the price pattern itself. In this case, that was an inverted head and shoulders pattern. but these are both exits. So these are exits. These are the kind of exits we love, right? These are the ones that have worked in our favor. The trend has continued to go higher. We've had the bounce off the bottom and it's extended up higher. Now, what we talked about is let's start off with target 1, 2 and talking about stops and exits. And in fact, specifically up to target 1. So target 1 on a stop and exit. So not a target, okay? But this is for T1. Those exits are, and let's talk about that right now. When we do get into the trade, we're looking at a lot of times a bounce off the bottom. And if this was our entry point right here, okay, hopefully you can see that. I know there's some lines in here, but if we were looking at, for example, breaking higher, or specifically a close above the high, the low day, which is one that we have used previously. We actually got into this trade as it broke above these highs, so we really didn't have a T1 target here, okay? We weren't trading up to the prior high, okay? But if we were, and we did get in on this, this is what it would look like. A lot of times we're waiting for some confirmation, a close above the high of the low day, or at least a couple of higher lows. There are a couple of higher lows right there. Okay. And that could be a potential entry point because we're looking at basically the trend resuming higher from here. Now, our entry point, if in fact it was, let's do this. If it was our bar here off the bottom, okay, that was a bar. It actually closed above the high of the prior day right here. Then the initial stop, again, remember, is below this initial low. So as we're waiting for a T1 target to be hit, that is our initial stop or exit. I'll just put an exit in there, exit potentially, as we're moving up to this level. Folks, this is so important. I'm going to switch to, let me do this, because we had actually a bull flag. This is a little bit different for VZ, but SYK, we had this trade last week that we looked at. This is kind of a bit of a, well, we had an entry on it, but then there also was an exit, or you could say, we got stopped out of this trade. That was our potential exit area. Okay. Here was the low of the move. We had a close above the high of the low day right here, but we actually got in a little bit later in the game. In fact, we were looking at this low. We closed above the high of the low day. And with that, we said, if we break below, it was our second day up right here. So let me just draw this in. Okay. So we had actually got in on that day. If you look at it, that is the Tuesday bar. And we said, if we go below this low, as we're waiting for the move to come up to our T1. I know this is quite technical, but we really need to go through it so we're all on the same page and we all know what we're referring to. And then I can refer people back to this class if needs be. But notice that the range in here is very, very short. If we're just playing a T1 to our target, which is the high, right, up top here, that's what I'm drawing into. That's the T1. If we're just doing that, we have very little upside return from our entry here. I mean, it's very, very small, relatively speaking, on this chart, right? I mean, it's still maybe like 10 points, but this is a longer term chart. We're in a high price stock, but it's small comparatively speaking. So that's our return is very, very short term. Let me draw it with a blue line to kind of highlight it. If we were to get in here, that's what we're looking at. So we don't want to have loss potential on the risk side that's like equivalent. In fact, and oftentimes we're looking for a 2-to-1 reward risk ratio or return risk ratio, potential return to risk ratio. That's too equivalent. We want to keep it shorter. We want to risk less because our upside is really, really quite limited. We're not getting too much anyways if our target is a T1. Some people would trade for a T2. That's a T1. So let's take this off. I'm actually going to take out right now our 10-period moving average so we can see this a little bit better. But now you got this. So here it is. Our exit below the low right below the low of our entry bar right here after our confirmation. We took it that day, like I said, because it was a Tuesday. We got a little bit of confirmation. We were breaking above a short-term range. Technically, it was a close above the high of the low day as well, using that bar too. But that is our potential exit. So again, closing below the low of that entry bar, or trading below, I should say, trading below the low of that entry bar. Where was the exit? It came right there. We had a volatile week and we got out. Now it's already popped back up, okay? But we're not giving it any slack. It should, if we're right, it should run right up to that resistance level and very, very quickly, okay? Or our T1 target. But that's one of the key points. We don't want to risk a lot on the T1. Now, our stops are a little bit different if it breaks above that level. But let's just make some notes over here on our pad so we've got this all down. So the T1 is a trade, the exit is a trade below the entry bar. In other words, we're just risking that difference between where we're at and the low. In other words, it should start marching all the way up to the T1 target up top here. Okay. All right. Let's see. I'm going to take a look at the chat here in just a second. Now, we have a T2. This is our T2, still on the stop and exit side. It's not the target. But what do we do in the meantime is we're waiting. We've broken above that level, and now we're waiting for signs that, maybe it's going to pull back. Well, that would be trade below the 10, is an example, 10-day moving average. Okay, and that is truly an exit to capture gains. We don't want to give it back, and I'll explain this, because we don't always get a full follow through when prices go up. For example, here is, as I adjust that y-axis down a little bit, you can still see that there could be entry potential here on this stock on SYK again to get back into it. But remember, the target for the T2 is about up here in this range. So there's your T2 target, right? With that, as prices are going up, I'm going to draw this in blue to kind of reference a 10-period moving average here for you. Let me see if I can just draw that a little bit thinner, and I can. Cool. So as this starts to break up higher, oh, let's get blue. There we go. So as prices come up here and it breaks up and it's above T1, it may in fact be holding above the 10-period moving average. Now, if prices begin to break down before they reach the target range, this is designed, the 10-period moving average, let's put it in there right there in blue. So the 10 DMA is designed to try to help capture gains already. Because there's not a guarantee, of course, that this flag pattern is going to reach its target. And so if it pulls back before that time, the 10 period can really help us. And why are we using the 10 as opposed to trading below the low of the prior day or whatever the case might be? Well, one of the key reasons is there could be a lot of gains that you have in here, and you don't want to give those up, and there's no guarantee you're going to reach the target anyways. And we have a lot more return potential relative to risk. Okay, so we start breaking above that the T1 level, we can flip into a 10-period moving average, which we should be above at that point in time. Are we clear on that? What do you guys think? Okay, let's see. All right. Let me know if you have any questions on that, but that's kind of what we reference each and every week as we go through this. I had some follow-up questions on that, and I really wanted to make sure we were all on the same page on this. By the way, this is a healthcare stock, and what do you do? What do we do when the price of the stock does this, and it stops out here, but there's still potential for it to go higher? Well, here's the thing. Have we reached the T1 level yet? Have we got there? It's right around, very, very close to 400. We haven't got there. So if we were to get in here, let's think about this. There could be resistance just right there. It's so close. If that happened one time, does it make sense to you guys to wait for it to clear resistance, to get above that level, for confirmation because it already faked out one time. Even though it's in a sector that's been showing some strength, it faked out. So that could be of interest, perhaps, to a lot of traders, investors. In fact, that's one way I want to look at it in these classes. If we get stopped out initially here, we get an early exit before we get to T1, let's wait then for it to get above the T1 level or the prior highs and kind of show us that it's going to get above there before we even think about going to a T2. But do we want to throw the whole trade away right now? Not necessarily. I mean, traders might not. Look at the trend. The trend is very, very good. It's intact. It's in healthcare, and healthcare has really been quite strong. Okay, so that could be a sizable move to the upside too. If this were to extend, look what's left on that T2 target. We're down here. There's your high. Pull back. If I'm just branching that out, we're probably somewhere right in this range, maybe above 420. Just eyeballing it here. That's a sizable move. That could be 20 plus points getting above there if it were to take it, run to a T2 target. So let's keep that in mind as we do that. Yeah, we can wait. We can still consider that. Exactly. It was. CAH is one. That was the next one. That's the last one we're going to take a look at. Actually, DXCM, I wanted to look at that one too. But here is CAH here for us, Gary. Yep, and that was a little bit different. So on CAH, Cardinal Health, it's in the healthcare group. And on this one, we did the short put vertical, as you recall. And let's see, here are our legs. In fact, let me just take this off. So here are our legs right here. So we had the 125, 123, kind of a tight range, just a too wide spread over here. And how are we doing on that? So it's up. Oh, that's actually down. I thought it was up earlier today when I looked at it. But, okay, so yeah, the stock's actually dipped quite a bit. Now, there are still 17 days left. We're above the 125. And let's talk about this. So this is our other sort of a way to look at managing the short put vertical. Just some ideas. There's going to be a number of different ways to do it, and different coaches will have different approaches. But I wanted to think about this one right now because we held above the 125, right? And sometimes when we do have, for example, we have sold the 125 put, the 125, and we bought actually the 123. Now, in this class, we're always talking about potential exits. We've talked about stops as well, right? Oh, I'm sorry, 123. I said 123. I wrote 125. 123. It's a too wide spread in here. Now, what does that have for us? Are we, in a way, in a sense, you guys, are we also capturing? Are we defining our potential risk? We actually are. Okay, so we've got a too wide spread in here. So we've actually kind of got, well, some would look at it as just like with a potential exit, right? They're trying to define that risk. They're trying to keep it narrow and tight into a range. Well, over here, the trade itself does that. So some traders will just kind of put that on, and because they have defined risk that we looked at last week when we put one in, and I've got another one today to do. But when they put that in, that trade in, they saw in the dialog box, we saw in the dialog box that there was a set loss amount, right? There's a max loss in there too, right? Now, as I mentioned in our disclosures earlier, if you just close below the short put, and not below the long put, well, you can be assigned early at any time too, but you could be assigned shares. So that's something just to be mindful of as well, of course. But define risk as we're looking at it here in a short put vertical. So keep all that in mind, okay? And remember, we looked at this trade as the possibility of a what? It was a little bit of a pennant pattern, which can be one of the stronger moves to the upside for a T2 target on a bull flag. So we did not get above that level yet, but that's a 130. We're just kind of still bouncing around a little bit here, right? Still in the healthcare range, which is showing some strength, and it could be bolstered by the sector as well. All right, well, in this case, what can we do? Like I said, there are people out there that will just say, I just want to set it, and I'm good with it because I've defined that risk. I'm going to keep an eye on the short put to see if prices close underneath it, but I'm okay with the total risk as it stands on that position in terms of the defined risk that we looked at. The other approach is to use a longer term moving average, something like a let's put it in here right now, a simple moving average of a 30. This is kind of an intermediate term trend. So here we go. Here's our intermediate term trend of a 30. Let's put it on. Okay, I was just going to say, if you close below the 30, that could be another way to exit out of that trade. Now, right now, it's kind of doing what we thought it would do. We thought it might kind of meander through that same pennant pattern, and it's doing that. It's just kind of, it did make a new high, and that's a positive all else equal. So some traders might stick with that. Do we make a higher low through here? We do have some higher lows still. We're still at the 30-period moving average. So this is still doing what we thought. And again, we've got that time decay in the form of the theta decay right there, which is actually 8 cents on both of those contracts a day. All right? So we're just looking to make the difference, the gain between those two. Money flow still very strong. Hopefully that's helpful. Okay. Perfect. We got that down. All right. So let's continue on. What if we go over here? Let's look at another trade that's similar to this that we could actually look at Costco. Now, that was one of the sectors that we looked at that was showing some strength too. It was Costco. Costco was up. It was going into I should say consumer staples was up. It was going to a sideways channel. Does that look like a flag? You guys pick up on the flag there? We do have earnings coming up. So that's something to be noted right there. Right there. So be mindful of that. Let's look for a short-term one, maybe the month of March as well. We can just see what we've got. But there is that risk factor, right? It's a high-price stock as well. We're in the thousands. But we could maybe narrow the cost of participating into this in terms of the margin requirement by doing the same short put vertical trade. Right here at 1,000. What's that? Like 1,000 mark here? You had a prior high over here. Let's just see where those thousands, the 1,000 lines up and see where we're at. So that's got a delta. And again, remember the delta is referencing for every $1 increase in the price of the stock, the option will move approximately the range of the option will move by the amount of the delta here. Okay. And although there's some good volume on this, there's still a little bit wide. We are in the thousands in here, but let's just look at a 5 wide here. So I'm going to click on the bid for the 1,000. Okay. Because we're selling that and we're going to buy the 995 right here. So it's a $1.32 credit. So if we click on the confirm and send, let's just take a look at this. So what this does right here is it says that there's a credit of 135. The buying power effect, the margin requirement is 365, and that is our max loss right there as well. This is short term. This is a very short term option. So we could get a better maybe potential return relative to like the max loss, for example. We could do that if we were to go out further in time. But even with the March contract, just 17 days left expiration, that's what we're getting right there. But we've narrowed that down dramatically. I mean, buying this outright is quite expensive in terms of the stock. But here is a way to kind of participate on a short-term basis. I'm going to go ahead and put this one in right now. We don't have the really a breakout yet. Let's see, for example, what indications do we have in terms of getting into Costco right now, just like purchasing the stock? If we were looking at it as a sort of a swing trade stock only, where here we are, we're getting that fractal that I've mentioned to you previously. There's your low, and then you had a higher low. Oh, but then you broke down today. So that would have already exited us out of this trade. We would have gotten out already, or tried to get out a break below that bar had we been looking at it yesterday. So it's already not, it's giving us interesting signs, like a hold is there. You're getting a fractal entry that we've talked about. You're getting a few things, but look at it. It's just not taking any of those right now. So therefore, maybe like we looked at on CAH, a short put vertical to try to see if there's income that could be generated as prices are going sideways until they break out. Because still, ultimately, we're looking at what could be a bull flag type pattern. You guys with me on that? Somebody's got to tell me they're with me. Otherwise, I just got to keep repeating it. So does that make sense? We did switch. So that's the difference there. We sold the put here, and we bought a put right there. Okay. We put a short put vertical on because we're not getting an entry. I mean, we there are some entry points here, but we're not, we've already broken below. So we're really not getting it. Sometimes, it hits that hold or something and it just starts following through. Hey, we've got one person. Alexis is with me here. Fantastic. All right. I need everybody to be with us here on this one. Let me know if there is any questions though, because I need to make sure we're on the same page. All right. That is our flag though. And you can see possibility of support down here. That's the first level that we sold at. We sold at the 1,000. So it can get a little bit technical, but that's why we went through and we talked about specific targets and exits as we line these trades up. We line them up with potential sector strength, market strength. We talked about that. We've got a trade here on Costco. Let's throw out some other ones here to take a look at. So here's SOLV in our last few minutes here. We'll wrap it up in a second here. But okay, this is kind of a longer term sort of a bull flag pattern that might be unfolding right before our eyes. Do you see it? We're still kind of following through right now. Take a look at this. Guys, look at this. So this is a long-term flag pattern. There's your consolidation. There is your breakout. There's kind of the first initial move. We had earnings already. They did beat earnings expectations, and we're holding it this little tight flag right here. Do we have a signal yet to get in? Let's look at it. What's the entry signal that we've talked about? A close above the high, the low bar is one of them. We can also look for a couple of higher closes, a couple of higher lows right here too. We don't have a close above the high to low bar. That's a big bar. So this is kind of in a sideways little bit of a channel. No real indications yet. Sometimes, like we said, some people might take a flag pattern that they like, that they think has strength, might have a longer term play, right? And a shorter term play in terms of a target, like a T2 target, a long-term T2 would look something like this. Here's your run up in price. We take that same range and we add it to these lows, and there's your target in price. It's higher. It's clearly higher. So there could be a short-term target that could fit inside that longer term. Oh, look at that. They tie in very close right up here. You see it? The long term, the short term converging together for the possibility of a target up around 95. A lot of stocks, even though this doesn't happen in all cases, but a lot of stocks, once they get above 90, sometimes, their strength, they just get sucked up to 100. Now, that's not going to happen, but I have seen it. It's not going to happen every time, but I have seen it in the market happen a few times. And here we are. We would be above 90 in that case. That's kind of a longer term target converging with a shorter term target. That's some real strength there. We're kind of holding in that range. So what we could be looking for is maybe the last entry signal that we discussed previously, and that's a break above the trend. So keep that in mind. I'm going to put a trade on here if, in fact, we get that. That's going to be one of our trades we're going to look at in next week if we can break above that level. Okay? Now, the exit, because we haven't got above T1, is going to be where? Where's the exit going to be? Let me point to it. It's going to be the low. It's got to trade below the low of the bar. Okay? Two more. And we'll finish up on that. There's backs. So we're getting very, very close here. We actually have a fractal right here, a fractal bottom. You've got the two higher lows. You got your mid fractal bar and the two preceding higher lows thus far today. Day's not over, but you can see it. Keep a watch on that. Notice the volume. Volume, very, very light through here. It's one of the key indicators that we like to look at too on the flag pattern. Strong volume on the upside, weaker volume on the downside. We don't have that. This is going to be another one we're going to potentially add in and put in here. We're going to have, if we do get an entry though, we're going to be looking at a low, an exit, I should say, below our low bar. Okay. You know what? I might just put a trade in here. We'll just, because we'll see what happens, but normally we're looking for that entry. I wanted to put one in during our discussion here, during our class. Let's just do that. So we've got one on backs right now, but it's going to be, the exit potential will be below that low. There's a quick look at our dialog box so you could see it. Max loss or buying power effect, etc. right there. The last one I'll just show you and we'll finish up on that. It is TXN. Texas Instruments chart. Okay, possible shoulder, head, shoulder, question mark. Okay, if we do get that head to shoulders pattern right there, shoulder, head, shoulder, that could be a real positive. Okay, we'll see. There's your moving average sticking in there as well, but we'll see what happens. All right, everybody. Hey, if you like today's presentation, again, remember to smash that like button, hit the subscribe. Bottom right-hand corner of the screen, there was a survey out there as well. Thank you, everybody, for attending today. It was great. Thank you for the conversation in the chat. Thank you, Cam, for helping out in the chat. Hopefully, we're clear here, and I look forward to future discussions with you all. Folks, have a great rest of the day. See you next time.